The market opens with major cuts tracking geopolitical worries. Frontline indices open 1% lower, with the Nifty and the Nifty bank slipping below the 20-day moving average.
Davos comes under pressure and is more than 5% lower, following a guidance of decline in revenue and margin in the second quarter in the company's Q2 FY25 business update.
On the other hand, we have Marico, which climbs, though off highs, following a good business update for the second quarter. The company guides for consolidated revenue growth in the second quarter to be in high single digits.
Steel stocks like JSPL, JSW Steel gain after brokerage firms Nomura and Morgan Stanley issue bullish calls on the stocks. Nomura initiates coverage and issues a buy call with citing domestic demand, among other factors. Morgan Stanley to upgrade stocks, citing visibility of some green shoots.
HPCL, BPCL and IOC come under pressure as crude prices gain for the third day to near $75 per barrel as hostilities continue to rise in West Asia. You're watching us here on Chartbusters. As you can see at the top of our screens, a deep shade of red in the markets tracking all that's happening in the world. So we'll keep an eye out on that. A bunch of stocks in focus as well. At the bottom of your screen, you have metal stocks doing well, ITD cementation as well. They won an order worth nearly 2,000 crores coming in, but there's more than just the order win that would move the stock more so. Any sort of clarity coming in on the deal. So a lot of stocks moving around on the way up, but largely it is a bright red screen, Nigel.
Well, that's right. Only select counters are doing well. Case in point being BSE, that's up close to 10%. ITD cementation is up close to 19% post the large order win, but we'll have to find out whether or not they're going to get a new promoter entity. But the sector that's been buzzing off late has been metals, and it's been twinkling off late. Now, NMDC, they have gone ahead and increased prices by 400 rupees per ton. To help us out with how production is shaping up, how is demand on ground, and what about pricing, we're joined by Mr. Amitava Mukherjee, the CMD at the company. Hi, Mr. Mukherjee. Good morning, and thanks a lot for joining in here on CNBC-TV18. Well, let's talk about pricing first up. You've increased prices by around 400 rupees, but that's after you reduced prices by 1,100 rupees per ton. What's your take in terms of difference of NMDC's pricing with competitors, whether it's with Odisha miners or with regard to imports? And do you believe there's a case to increase prices even further from here on?
Well, after almost 3 months, we've been able to take a price increase. So that's the good news. That's the light at the end of the tunnel. I hope so. Of course, with respect to imports, we are still in the East Coast at 65% FE. We are still lower by around 35%. And in the West Coast, it is lower by around 27-28%. As compared to the other domestic miners, well, you will see that on a landed cost basis, we are at par. We are reasonably at par. We have taken this price increase as most of the steel prices, whether it is rebars, etc., pellets or billets, they've gone up. Except HRC, it has not moved in the last 2-3 weeks. But the other prices were showing signs of northward movement. So we thought that this is a correct time to take a price increase. We hope that if this trend continues, and the international prices have also gone up by around $10 from 96 or 98 to about $108. So if this trend continues, hopefully, let's see, next month we are keeping our fingers crossed, but hoping for the best.
Right. So you expect, the prices to increase next month as well if the international trend continues. Would you be able to give us a sense of the quantum of that price increase that you may take next month, all things being constant right now?
It will be very difficult to speculate on what we'll do next month. Let's see how the market thinks.
What we're trying to get at is that do you have a rule of thumb that this is what NMDC prices would trade at a discount to versus the global? You said that you're about 55 to 65% lower. Would you like to narrow that gap?
No, it's not 55% lower. It's 35% lower in the West Coast. But then
yes,
it is neutralized by the export duty. So it has always been never at par with the international prices. Indian ore prices have always traded at around 25 to 30, 35, sometimes even 40% lower than the international prices. That's been the trend throughout. So I don't think there is a case for import price parity of our ore. It has never been the case, and I don't think it's going to be there in the future as well.
Let's talk about your operational update then. We have the numbers for the first 6 months of the year, and they're a little bit lower because of that, there was that worker strike, then there were some logistical issues as well. Earlier, you were talking about production number of around 50 million tons. That's going to be a tall ask, and most on the street believe it's not possible. What's the fresh guidance you can give us on sales as well as production numbers for this fiscal, FY25, since there's a degrowth so far?
So if you see year-on-year basis for the H1, we are about 2 million short than last year. We'll make this good. There's absolutely no doubts about that, and we'll exceed that. 50, yes, we'll still try to be 50, but we should be comfortably at around 48, should be comfortable. And if things go well, then we can do 50 million ton. Remember, last year, after January, almost there was no production in Kumaraswamy because we had reached the MPAP level of around 7 million ton. This year, we have around 8.63 million ton for MPAP at Kumaraswamy. So that in the next 2 months will obviously, in the last 2 months of the year, will obviously come. So I think around 48 plus should be the production guidance. Dispatch would be 50. Dispatch, I don't think there is an issue. Dispatch should be around 50 million ton. We are only 1 million short as compared to last year, if you see. And we have had a few new sidings at Bailadila. So I think our capacity for dispatches have increased, and we have a new rapid wagon loading system in Kirandul as well.
So 48 million tons production and dispatches at 50 million ton. You still believe you can do that, correct?
Yeah, I think that should be.
And you briefly mentioned Kumaraswamy, you have got the clearance to do around 8.6 million tons, if I heard that correctly. For the company on the whole, what clearance do you have to do? I think the last time, if I'm not mistaken, it was around 53 million tons, EC clearance.
It is around, last time we talked, it was around 51 million tons. Now it is 53.8 million tons.
And how you see this go up from here? By when?
Yeah, well, I think progressively by this year end, around February, March, we should see another 4 to 5 million tons of EC capacity coming in, because some of our mines are, as you know, 5-star mines. So we can increase our EC by 20%. We have applied for that. They are at various stages of approval. We hope that by the last quarter, it could be January, it could be February, but I think that the last quarter, those approvals should be available.
All right, so 57, 58 by the end of this year. You had this target of 67 million tons in terms of production by FY26 and the ambitious one of 100 million tons by FY30. Those targets are still on, right?
Oh, yes, definitely on. In fact, we are rather serious about it. We have catalogued the investment that is required. As per our latest estimate, it's going to be around 70 to 75,000 crores of investment that will be required in the 4 to 5 months. So we have done the first thing of cataloging it. We are the various projects are under at various levels of approval. Some are at the board level approval, some are lower down, but we are approving various projects. So I hope that by the end of FY29 or 30, we should have completed execution of these projects as well. So we are very confident that 100 million ton by the end of the decade.
These numbers that you're talking about, 70 to 75,000 crores in terms of capex. Over how long are you looking to deploy that, and where do you get this money from?
5 years. We would expect that to be completed in the next 5 years. Mostly it will be internal accrual. I think we have cash reserves of around 14,000 crores right now, even if we account for dividend and the future cash flows. I think almost all of it can be financed through internal accrual.
Okay, all right. Mr. Mukherjee, you don't talk to us too often, so we'll have to ask you on NMDC Steel as well. And we're going to talk about the other company. What is the current volumes you're doing? If you want to give it to us on a monthly basis, what is it looking like? By the end of this year, what is the total volumes that you'll do from NMDC Steel? And when does it break even?
Your last question first. It should break even by the end of this quarter on a monthly basis at an operational level. So we should be, all our problems we have been able to solve, except one, which was dispatches. Now, dispatches, I just explained it to you a little bit. we had a 5-kilometer stretch which was non-electrified, and as a result, the rake placement and drawal was taking a huge amount of time. Now that has been electrified, it is being tested, and I think it should be operational in the next 7 to 8 days. So once we are done, we have done production of around 130,000 per month of HRC in the month of August. And we just need 150,000 to break even, not really much. So we are almost there. Of course, September we had to throttle down our production, essentially because we could not make the dispatches and our stockyards were full. And because our stockyard was full. But going forward from October onwards, once we have solved the problem of dispatches, production is not going to be a problem. 160,000, 170,000 per month, yes. And by the end of this quarter, on a monthly basis at operational level, we expect to break even.
So you'll break even in Q3 of this fiscal, correct?
Yeah, Q3 should be a break even, but of course, because we have lost money on Q1 and possibly will lose on Q2, and an annual break even, it might be beyond March, but on a quarterly basis, yes, Q3 should be a break even.
So for the year, you'll do 1.5 million tons approximately?
Yes, we wanted to do around 2.2 million ton. So the last 6 months we should be doing about a million ton, and we have done around 0.6 already. So we should do around 1.6 or 1.7 million ton by the end of the fiscal.
Got it. And is this asset on the block? Earlier, the government was talking about DIPAM was saying that they want to sell it. Then after that, there was an election in the middle, and things went away. In fact, the steel producers, they asked me, Nigel, is that asset on the block? We have already submitted our EOI. Is it on the block?
Well, I have no comments to make on that.
You have no comments, or do you?
No, I don't. I'm not privy to any further information on that.
You're not privy to any further information, but it could be on the block, is what you're saying.
I couldn't. But you can't answer on my behalf. I don't think I've made that answer. No, I have
no, because there's constantly news, so we just thought that you'd be best placed to understand this.
No, I'm not the best place. I can assure you, I'm not the best placed person on that question.
Okay. All right. So you will keep going as if the asset is not on block.
Yeah. I'm running a steel plant. I'll make it profitable. That's my job. And I'm going to make it profitable in 3 to 4 months' time.
Okay. All right, Mr. Mukherjee, appreciate you joining in, giving us all those guidelines with NMDC Limited as well as NMDC Steel. Look forward to having a chat with you at the end of Q2 numbers. For the time being, though, we'll slip into a short break, come back. We'll focus on the technicals of the market.
Welcome back. The market's still holding at lower levels today, closer to 300 points lower on the Nifty. Let's get in a quick technical check. Sachidanand Uttekar joins in. Sachi, your thoughts on the indices and individual stocks quickly?
Good morning, Mangalam. Good morning, Nigel. I think clearly both the indices are in the negative grip. Both are trending lower below the 20-day exponential moving average support. So if you look at the Nifty, I think the trading could be restricted within the space of 25,440 on the lower side. And on the higher side, it may find itself difficult to sustain at 25,680. So the writing at 25,700 looks very dominating, and probably we may end up in a consolidation mode. So it's better to avoid any fresh long positions when it comes to the indices, and probably on the lower side near to that 25,400, 420 mark, one can look for some buying opportunities in Nifty. When we look at Nifty Bank, clearly I think there is pressure, and this particular pressure may continue to push the index lower towards 52,000.
Okay, all right. Sachi, individual picks?
Good morning, Nigel. I think there are some pocket of strengths which are still doing fine, and pharma looks very consistent here. We are recommending buying positions in Divi's Lab. The overall structure is still bullish. We have a bullish flag formation on the daily scale. The immediate target that we are looking at is around 56.50, and that's why we are recommending building long positions with a stop loss at 54.80. We have recommended this particular position to our clients, so this will be a disclosure. And on the short side, for the last 4 weeks, Indigo has been facing a lot of pressure near that 4,900, 5,000 mark. Right now, it has breached below critical support level. The daily RSI has given a breakdown, and there is a 5 and 20 negative convergence, which is a good sign of negative momentum. So we are expecting that Indigo can break down towards 4700, and that's why we are recommending building fresh short positions, keeping a stop loss somewhere close to around 48.65 on a closing basis.
All right, Sachi, thank you so much for that. Indigo aviation at the low point of trade. In fact, one of the reasons could also be rising crude prices. So what we'll do is take a short break. On the other side, we'll put focus on the rise in crude prices owing to these geopolitical tensions. Stay with us.
Welcome back. Markets holding at around the 25,500 odd mark. But let's turn our attention from the equity markets to the commodity markets. Crude prices have been on a tear following the tensions in the Middle East. Manisha joins us to fill us in with a quick analysis of that. Manisha.
Well, thank you for that. Yes, the crude oil prices are trading higher for the third straight day today. And we did see a 5% of an immediate knee-jerk reaction after we did hear about those Iran ballistic missiles over Israel there. Still holding around that 75 mark right now. Well, it is about Middle East now as the escalation and violence really spreads further east. Let me remind you that 1/3 of global crude oil production comes in from Middle East. And this is the area that the markets are keeping a keen eye on. Having said that, the reason that you still are way off this year's high, which was $92, we are just about holding 75 right now. We've come off the low of 68 to 69. The reason the crude oil prices haven't run up further from here is because the global markets are looking at a huge supply surplus at this point in time. OPEC plus spare capacities stand at around 5.7 million barrels per day. This is much higher than what Iran does in sense of production at around 3.4 million barrels. Also, we are looking at a weak bearish quarter behind. Crude prices in the month of September declined by nearly 9%, 17% of a decline in the previous quarter as well. If you look at the US crude production, that has been increasing as well. Currently stands at 13.4 million barrels and could end the year at 13.5 million barrels. That is also putting pressure on prices. The US gasoline demand has been the lowest in 6 months. And apart from that, EIA says that the US production is not the only thing that is increasing. The US inventories have been increasing as well. The latest count has been 3.9 million barrels there. The OPEC output cut, which as of now stands at 5.9 million barrels, they could start to see that also ease gradually going forward. 180,000 barrels per day is what you could see start coming back into the markets from the month of December as well. The Wells Fargo report should come in on your screens because that says that the global production as of now is at 102.6 million barrels, which is expected to increase to 104.8 million in the next year. So you are looking at higher supplies, higher production, higher inventories, and the demand clearly not matching up. Is the reason most of the banks and brokerages are looking at lower prices for crude going forward in 2025. Highest really comes in from Goldman Sachs at 77. Rest everybody else is talking about 75 for the next year as well as an average, whether it's UBS, Bank of America, JP Morgan. The least bullish clearly is Citi, which is talking about $60 a barrel of a probability as well going forward. So unless there is an impact of war on oil facilities and oil supplies, you perhaps are looking at crude oil prices not clearing above 80-85 in a hurry.
All right, not going above 80-85 in a hurry. That should be good. With that, thank you so much for that update, Manisha. Markets still holding slightly above that 20-day moving average for the Nifty. We'll wrap up on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.